So what's up, everyone? Super excited. My name is Maya Wawolabi, and I welcome you to this free session. Just want to engage with you guys and see how best you guys can maximize the market this week. How many of you are ready for the new week? How many of you are ready for the new week? Okay. So just give us like 3 analyses, and I'll answer you guys' questions. Okay. Okay. Makes sense. Let's kill it. 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 Let the testament begin. I'll give you guys 3 analyses, and how best you can approach the market. Now, if there's anything you guys know I don't trade against the trend, and I always look for my what? Higher low, higher high, higher low, higher high, and higher low. So I always want to take my trades on the lows. So when the market goes up, I expect it to go up on any of the what? Either other blocks or imbalances. Okay? And if it is a sell, you want to keep seeing lows. Okay? So I'll take a case study tonight. And we're going to move from there. So the first case study I'm going to be sharing with you guys is AUD card. Okay? AUD card. So since about 2 weeks, AUD card has been creating lower lows. Okay? So we had the first you come to weekly. You agree with me that the market did a lot of push up here. So we have a higher low, higher high, higher low, higher high. So there's something that the market has the potential to do here if it's going to go down. Let's go to monthly. Monthly is showing that this guy, so it's not really trending, okay? But you're seeing lower high, lower low, lower high, lower low, lower high. And the lower high means that the market is coming down, okay? However, when the market is coming down, you need to respect the higher time frame order blocks that are available, okay? So basically, come to daily. So on daily, since we have that understanding, you can see that the market has been printing more lows, lower high, lower low, lower high, lower low, okay? With that understanding, we go to 4 hours. On 4 hours, lower high, lower low, lower high, lower low, lower high. Okay? That takes us to what? To 1 hour. With that understanding, we still have what? Lower high, lower low, lower high, lower low. So last week, we had this move. So since you know that this is a lower high and the market has been trending, we had this other break of structure. So that means this guy broke this guy. Now, you need to understand also Now, when the market is creating lows, so this is your break of structure, break of structure, break of structure. Okay? So your goal is to trade the retracement. So because this guy had broken this guy, you need to see the market to raise up. So what the same diagram, bring it up here. You will see that this guy came down, went up, came down, and broke this break of structure. So we expect this guy to come up back. So when he's coming up back to the other block level or the retracement level. So either you're using, so when either you're using Fibonacci, you're using smart money concept, you're using supply and demand, anyone you're using, the same thing is there, but you must make sure you're seeing what you want. So basically, this allows us to see that the market has been giving lower, low, lower, high. So last week we had this move. So we had this first guy here. Let me clear my screen again. So now we're on 30 minutes. And you see that it's in alignment with the weekly, is in alignment with 4 hours, is in alignment with all the lower time frames. Now, if it is not in alignment, you do not have to trade it. It must be in alignment. That is why you're a trader. If it is not in alignment, so if it's not in alignment, you don't have anything to do with it. Yeah. So right now, we have the market reacted to this 5-minute entry. It dropped again, breaking this break of structure and this break of structure. So right now, this is the origin that broke this guy. Okay? So we now have in this light, this guy. You want to ask yourself the question, can you see a drop, a base, a drop? The drop, a base, a drop. That is liquidity level. That's the supply level. So this is now what you're trading. Okay? This is what you're trading. So the market retraced back up. Okay, for some of you that know liquidity, this is liquidity grab. So if you come to 30 minutes, you'll see what we're talking about around this zone, because this becomes the area of interest. We have a good news. And the testament began. Yeah, it's back. Good. So if you use your entry, you have the origin here. Okay. You have another drop, which is lower high, lower low, lower high. So the market came into this guy. So this becomes origin, this becomes continuation, which a lot of time I love to pick entries around origin. Okay, this should be my entry. Okay, this should be my entry. But I like to let people know that origins are good, but a lot of time the institutions don't want to use the origin. Okay, they just want you to understand that they are trading. Okay, they don't want you to understand that they are trading. They don't want you to get that. So because I have this break of structure, I have this liquidity, this supply level, which is a continuation from this origin, has been tampered, has been tapped into. Okay? So, but I didn't enter this trade instantly. Now, you need to understand that you don't have to. So what I do in most cases is you want to use either level removal, which is risk entry approach, or you use your Wyckoff, which is advanced entry. So this trade was actually an advanced entry strategy approach. Okay, so it was on 5 minutes. Good. Okay, now this is my best entry, but the market didn't get there. Okay, but what I noticed was that because of this imbalance that has been created before, the market is using this zone. So how do I approve that this zone is, like I told you, is an advanced strategy? I have what is called preliminary support. PS. PS. After I have PS, you have what is called buy ceiling, which is BC. After BC, you have what is called AR. After AR, you have what is called uptrust. Uptrust. Sorry. Yes. Uptrust. After uptrust, you have what is called sign of what? Sign of weakness. After sign of weakness, you have what is called uptrust retard. Mr. Mayowa, what is this? It's called Wyckoff theory. Okay, it's an advanced theory. Even a lot of my students in the community, I don't teach them this because I want them to first understand the simple part of trading before we go into the advanced. So you see that this place is higher. Okay, and you can see that this place is lower. So the uptrust must break this soul level, which is this break of structure. So when it broke this break of structure, it tells me that the market will come back here for a sell or create more high. So in this case, look at what it did on 5 minutes. Good. The market went up and hit that stop loss out. Good. Accept your, see, don't fight it. Okay? Don't fight it. Good. As it did that, it created a new uptrust, which is what I tell people. Uptrust retard. And that uptrust retard created another new low. So right now, you have what is called test here. Test. Now, whenever you're trading the Wyckoff schematic, you do not enter the trade in a wrong section. If you have picked this trade here, this is a wrong section because AUD is in the night. CAD JPY is in the New York, 1 p.m. And this is my period separator. So because I knew that this is not a London pair, you don't need to pick it. So we waited for the New York, and when the New York opened, it came and created the test. And I also recommend you don't even trade test. You trade the Lipsy. So this is your Lipsy. This is your first entry. This is not your first entry. The first entry, which is test, is not your entry. The main entry is the drop that broke this low. Let's go to 1 minute, you see clearly. So this is test. After every test, you will see that if the market is ready to go, it came, it broke this low, this break of structure. Now, when it broke this break of structure, it approves the test level as an entry. So this will be our first entry in the New York section, and that stop loss is just 2 pips. So the market broke this guy and created. So this is Lipsy, and this is what I recommend you trade, especially Lipsy. This is what I recommend you trade. So when you trade Lipsy, you're ready, guys, to make money. And this is it. So with this, I can now say to myself, Mayowa, get ready for a push down. Because at every Lipsy, the market will drop to the next other block on the higher time frame. And that is how this market gathered a lot of people's stop loss. It collected a lot of people's money. You can see preliminary support, buy ceiling, AR, up trust, sign of weakness, up trust retard, broke down, went up again, came down, went into the New York section because it's AUD card, and it broke again, broke down, and now went up. Then you drop sell. Now that is even not enough. When the market started dropping, you can now start adding position. Don't forget, another level has been broken here. So what happened? I still have another entry here, another Lipsy. So my first entry is here. My second entry is here. Sorry. Good. So what am I going to be doing? I'm going to be rocking this part. So when you're talking about the schematic, this is your first phase. This is your first phase. This is your second phase. And this is your, it's not duplicating. Good. So this is phase A, this is phase B. Don't worry, the line is not duplicating. Well, we're going to be trading only this test and Lipsy. So look at, the market does what again? It trades back up. Shoop. I have a good news. Let a testament begin. So you use this guy. Didn't come up here. You came to use this guy. Let's go to 15 minutes, so it's going to be faster. So that's how to rock and roll when you're using the Y curve approach. Look at another reaccumulation here, the redistribution here. So this is how you catch 1 to 20, 1 to 50. This trade is 1 to 40. It's 1 to 40. One to 40, 1 to 50. Okay. So number one, I use what is called market structure. Must be there. My break of structure must be there. I need to identify liquidity, must be there. And if I'm using the Y curve, I use the Y curve. And the next thing you must also know is that you want to work with a session. Session is very, very key. Now, a lot of time I don't use Y curve, okay? I don't use Y curve because sometimes you don't even see it at all. At all. Could one have entered this trade with the other entry style or how? Yes, you. Yeah, if you're using other entry, let's say you're using risk entry. If you're using other entry, this is what you will use now. This is lower high, lower low, lower high, lower low. So the market printed like this. Watch, guys. Went up, came down, went up, came down, went up, came down. You can see that place? Now went up and dropped. So if you don't call this Y curve, you can actually go in on this trade on the drop retracement down. Okay? These are not, this is called double confirmation entry. We call it double confirmation entry. Okay? This is the first confirmation, first break of structure. Let me clear it again. Let me zoom it out. So if you are not using Y curve, definitely it's there. You can see it. Or let me go to 5 minutes. Welcome to my testimony. So you go to 5 minutes. You can see this guy went up. He came down. It went up. This was the high. When it got to that high, it came down. The market went back up again. It came down again. All this place now, they are collecting, all these retail traders that are putting stop loss, they are collecting their money. Then what happened? It went up now. It came down again. It went up. And can you see the drop? The drop. This is the drop. So this drop broke this structure, number one. Went up again, came down, and went up back to this place. So right now, this is called confirmation entry. Confirmation entry is when you, double confirmation entry is when the market breaks, break of structure one, break of structure two. Sorry. Break of structure one, break of structure two, and the market goes up. This is called double confirmation. And the market drops. Can we use 1 minute? Yes, 1 minute too will work. One minute will work too. This is 1 minute. Look at. Let me clear the screen. Look at. This is the first eye that produced. This is the first eye that broke this low. This is your first break of structure. Break of structure. This is the new eye that broke, that created double bottom here. This guy, what happened again? He went up again and created new eye. This is the new eye that now broke this guy and gave us another low. So you can see break of structure one, break of structure two, break of structure three, double confirmation. And the market comes back up here. So what they're actually doing is that they are holding forth so that the card pair, they wanted to open the market. They wanted to come into the market when the New York opens. That's what they are doing. So they push all these, impatient traders You know this is card JPY, card chef. Sorry, AUD card. No need to enter London now. All these ones are London. So they will be collecting your money. They will collect it. You will enter again. They will collect it. You enter again. They will collect. You enter again until they enter into the what? Into the Canadian section, New York. Now in the New York section, you can see that. You can see that. That is when they now started moving the money. So you also need to master trading in the right session. Because a lot of people, where they lose is that they trade anytime. And I've been in that shoe before. I lost a lot of money. You know, I lost a lot of money trading. That's it. So if you really don't get that, it's because you are not attentive. Adeolu said, what are the right set pairs for the session? Google it now. London has its own GBP, Euro, New York, Canadian, US dollar, gold. So I won't trade gold in the London section. I'll trade gold in the New York section. Perfect. So the second entry is with the other block. Yes, second entry. You can see now. Immediately came into the New York. Immediately came into the New York section. This is the first guy. And this is the other block. That's your entry. Immediately. That's it. The journey started. Okay. Yes, you need to see reaction at the point of interest. We are not using reaction again at the point of interest if it is on 1 minute. 1 minute is for 1 minute, 5 minutes, 10 minutes is for entry. Don't forget we started this analysis from 30 minutes or 1 hour. Don't forget we started it from here. And that bet this. So I think the first thing is the understanding of lower low, lower high, lower low. That's the first understanding. If you don't get that, you're going to be missing. This guy broke this guy, it approves this guy. This guy broke this guy, it approves this level. This guy broke this guy, it has approved. This guy has broken, it has approved this guy. So I'm going to be dealing with all of these guys. Origin, continuation, continuation. This guy come up here, we sell. So will I sell immediately? No, bros. We're not going to sell immediately. We're going to wait for the market to retrace back up here. And I've already seen liquidity already here. So will I enter this trade this night? No, I'll wait till tomorrow. Sometimes I don't even trade on Mondays. A lot of time, because if you trade on Monday, the market will use your money to retrace. Any question, guys? Type me where you're joining from, guys. Let me know where you guys are joining from. Adiolu, Ahmed, Akosile, Samuel, Aremo. Type me where you're joining from. Dave. David Teniola, what are you doing on general section? After you've done private section, God is watching you. Fumi, Gabe, Edwin, Don, Galaxy, Isaac. Type in where you're joining from. Marvin, Lagos, Infinite, Mushin, Isaac, Akwa Ibom, Deolu, Lagos, Akosule, Edwin, Warri, Aremo, Ijebu-Ode, Otadon, that's fine, Osaro, Gabe, UK, cool. J, Ghana, makes sense. So basically, that's it. That's it. Bakari Mowe, cool. So let's check what GBP JPY has. Okay. So from my COT report, sir, refinement, please. What's refinement? What do you mean by refinement? What do you mean by refinement? Let's continue. You draw your point of interest on the week. Yeah. Yeah, I actually trade the lower time frame entry. So if you look at this very well, you can see that we have higher low from beneath, we have higher high, we have higher low, we have higher high. So right now, this becomes your point of interest. Okay? Now this is already gathering what is called Wyckoff. Preliminary support, bounce, went off, bounce, right off. Okay? So it can be reaccumulation and it can also be distribution. Okay? It can be reaccumulation, it can always also be redistribution. Okay? So How do you get COT reports? This is my COT report for the week. It is a data from the banks. They submit it to this commission. CFCTF. Commitment of traders. I have. Okay. So I get this. A lot of reports here. Okay. So once I have this, I pull it out and I get this. So this is what I have every week. And all my proteges also have that. All my mentees, they have this every week. So every week we have, this week now, I'll drop this for you guys in the group so that I can annex it this week. So GBP is buying, is strong, JPY is weak. Okay. So that's why I'm looking for buy. Okay. Fundamentals or Saro. Okay. It's for the elders. Okay. So with that, I have an understanding that this could be a potential reaccumulation, but it's already forming Y curve. So a lot of time when reaccumulation, when distribution changes to reaccumulation, it's because of the fundamentals. Okay. So I'm expecting this guy, you all can see, is already creating higher low, higher high, higher low, higher high, higher low, and what? Lower high. So that means something is about to happen. Okay, so that means this is lower high, okay, but we still have a low that has not been removed. So apparently, when the market retraces back here, I'm going to look for a buy. Okay, so I can now choose to say my buy will be a short buy because I'm already seeing that the market is doing some kind of zigzag, okay, which I won't like. Okay, so from 8 hours, I can go to 1 hour. So from 1 hour, I can see that, oh, what's this guy doing? I can see higher low, higher high, higher low, higher high, okay? So the last higher low, this is it. And this guy, I've reacted to it and it went up. So this guy did not break it. So that means this guy becomes a sell. Because the reaction to this higher low did not break this guy. So this guy continues as a sell. So after this low, where is the next low? This becomes the next low. So this becomes the liquidity because you have a break of structure here. This becomes liquidity. So I expect this guy to retrace down into this place for a buy. That's why I have an entry at that place for a buy. Because this guy, the higher low, higher low, higher high, higher low, higher high. This guy, when he reacted to this higher low, which is here, It went up, but it did not break this guy. So because this did not break this guy, that means this guy will react as a sell and it will drop. So we expect this guy to drop to this lower low, higher low rather. So I'm actually trading higher lows. Don't trade more than that. So this is origin. We have continuation. So are you trading continuation or you are trading? So I can say, okay, I want to also check out this small one because of this liquidity. But guys, I don't have to. No, I don't have to. So when the trade bounces off here, I look for a buy. Oh, Mr. Maya, what of if it breaks everything? If it breaks everything, I'm not buying again. I'll look for sell at this place so I can come into my fib imbalance. And if it breaks the imbalance, then I'll use the lowest low. Okay, lowest low. You can see that the COT report is going up, so I won't want to trade against the COT report. So apparently, I'll be looking for a sell for a buy on GBP JPY for this week. And if it does well, good. If it doesn't go well, good. So that does not mean I'll now use 10% of my account. No, only use 1% of my account. So if it hit me out, I look for the next trade. No emotions. I've used this over and over again to make money, so no challenge. Okay, so I'll go through one more pair. Okay, I'm currently on UJ. UJ is in massive profit for me. So let me analyze UJ. So I'll give you EJ as a trade for the week. Then I'll give you the reports. And you share your testimonial with me with your strategy. Every strategy works. It's just your approach, guys. Every strategy works. Your approach, very key. Your approach is very, very key. Okay. So I've been seeing the market do a lot of up and down here. So, but why did I capture this trade? I captured this trade because I saw preliminary support, buy ceiling. No, sorry. It wasn't a white cup. It wasn't a white cup. It was just my normal smart money concept. Okay. So this guy, this origin broke this guy. This guy broke this guy. And for it to go up that way, okay, I selected this what? Other block here. So I use that other block. Okay, there's an imbalance here. Okay, there's even between imbalance and other block. Okay, imbalance is where you see a movement of candle and they do not touch themselves. That's what is called imbalance. Okay, this imbalance. This eye did not touch this eye. Did not touch this low. Okay, so in between it is an imbalance. So when the market comes into it, 90% of the time it reacts. 90% of the time it reacts. Okay, so and that same place, I trade it with fib. Okay, fib. So this is actually fib with imbalance. So if you have fib imbalance, so this will be 78.6. Okay, 78.6 and imbalance. So I don't trade fib alone. I trade fib and imbalance. It must work together. Okay, it must work together. And when it works together, it allows me to be able to leverage more. Okay, it's a confluence. So when the market bounced on the fib and the imbalance, good. And I pushed further. This guy also did what? Break of structure. You can see it broke this guy. not punish poverty. As it broke that guy, it approves this guy. So if you go to, because this guy has broken the structure, 10 minutes, this guy dropped into this other block, which is 50% of this buy to sell. And when that happened, I didn't enter on this guy. I allowed there to be a break of structure, okay? And I use this other block. So my entry is actually here, okay? My entry was actually here. So it was just about a 5 pip stop loss, or yes, I think it's a 5 pip stop loss or 6 pip stop. So that allowed me to go into this trade, and I'm expecting it to go, because it's a fib entry, fib and imbalance entry, the TP will be at the top here. So that will be about 1 to 30, take profit 1, and TP2 will be what? 1 to 20, 1 to what? 1 to 40. But 1 to 5, break even. So I've already broke even. I've already broke even on this trade. I've already broke even on this trade. So that's apparently it. Very broke even on it. So if you come back and hit me out, no challenge, no fighting. Okay. Any question, guys? Shoot your question, guys. Shoot your questions. So that got my view, and with that, no, that's it. So I have 2 entries, take profit 1, take profit 2. I'm already in good profit, but as an investor, I want to see if I can squeeze it out. And if you know how to use FIB, know that if you go in on this trade here, your take profit will be what? 1 to what? 1.27. So I'm going to hold this trade. I'll try my best to hold it to this place, because when you see money on your MT4 and the money is enough, you are the owner of your money. Don't forget, until you close it, it's not your money. Okay? So I'll try my best to hold it to this place. And if I can do more, I'll hold it more here. So I'll come out at my first entry here. I'll come out my second entry here, and I'll come out my third entry here. So with this approach, you're good. So you need to understand, don't just be using FIB, you need to also make sure there's imbalance there. Okay? I think I've taught enough tonight. So I'm going to drop GBP JPY for you guys, and I'll drop one more Euro USD. So let me take your questions if there is any. So what entry did you use for Wyckoff or other entries? What entry? I entered on, I prefer UTAD. Is there re-entry on UJ? There should not be re-entry. There's re-entry, that means my profit will reduce now. But apparently there's still another block here, so the market can come and bounce there. The market is just opening. The wick is just opening. You can see you have a break of structure here. So if it comes here, it's not a bad entry. Just that I don't like it to be too high. Okay, so I'll prefer Instead of using this length, you can see higher low, higher high, higher low. So I'll use this small guy on 1 minute. So my entry will be here. If it is a must, I go in on that trade. So my re-entry will be 2 pips stop loss. Two pips stop loss. So if it comes there, good. If it doesn't come there, so we can join this guy. Okay. Just that if it comes there, it's almost to my entry. No challenge. So this is a 2 pip stop loss, which is good. And I'll use, since I'm already in it, I'll just add small positions to it. It's already in. This is your liquidity, which approves this other block. So if it comes here, I will add more position. That's clear, right? Only? Is that clear? Okay, real money. So if it comes there, good. It could come there because EU is doing something like that. So it could come there. EU has white cuff for a short sell. Preliminary support, buy ceiling, AR, up trust, sign of strength, sign of weakness, UTAD, break of structure, tests. So I'm actually expecting EU. So these are the two trades I'm giving you, DJ and EU. So the market comes up here. Good. You sell and comes down, you buy. So we're going to sell from the top to this place. We're going to buy from here to the heavens. Liquidity grab is when double top is cleared. Liquidity, equal lows, equal levels, cleared. Cleared. Equal level. When the market passes through it, this is liquidity. Market has cleared it. Equal lows or trend lows. When market breaks it, this is liquidity. That's called liquidity grab. Okay. So I got this since last week, and I expect it to deliver this week. The market pull up back into this other block, and we now have preliminary support, buy ceiling, AR, all of that. So we're expecting the market to pull up into this place for London session tomorrow, and it drop. And if it doesn't come there, that means that it's not coming up. So don't fight it. So we can buy to this place. But my big bias is we are buying EU. That's my big bias. David, is this EJ coming? Is still going to come down like this? Let's be prayerful. You come and pick us. Abi David? Okay, guys, any other question? Any other question? Liquidity, all about removal of double top. Yes, that's liquidity. Liquidity is the retail people, retail traders making money available for the institutions. That's where they put stop loss. So people put stop loss here, then they put take profit. So the market comes and clears. Liquidity is different from level removal. Level removal is when you have a level like this, remove. It's not liquidity. This is, level removal is like break of structure. No, level removal is break of structure. Level removal. Liquidity is where people put stop loss. Where an average trader puts stop loss is liquidity. Where an average trader puts stop loss is called liquidity. So the smart money traders, they look at where generally break support and demand traders, support and resistance trader will put their stop loss. That is where they will now do opposite. Okay. Okay, that's fine. So we're good, guys. So I have a question. Other block. Another block is when you have a bullish move. You can see this place now. This is another block. Red followed by blue by green is other block. This 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 is other block. Bullish order block. This is bearish order block. Bearish order block. Bullish order block. Red candle before the green makes it bullish. Green candle before the red make it bearish. So there are so many other blocks in the market. Red candle, bullish, other block, bullish, other block, bullish, other block, bearish, other block. I've got a good news. Which other block is valid for entry when we have multiple? Anyone. It depends on your strategy. Anyone. Nobody knows that. We just have checklists. The banks can use this one, this one, this one. All other blocks works. It is the reaction of your other block that will know that that is the entry. Make sense? Don't forget, you are not trading other block alone. You are trading other confluences of the other block. If not, if I see this one, I will enter. If I see this one, I will enter. If I see this one, I will enter. No, you're not trading other. It is when it comes to entry that your other block matters. I've got a good news. Yeah. Let the testament begin. We trade FIB plus other block. No. We don't trade FIB and other block. You rarely see FIB and other block. When it comes to confluence, there are a lot of things you can use for confluence. FIB is one of it. Other block is one of it. Imbalance is part of it. Trend line is part of it. So all these are confluence. I've got a good. What else? Let the testament begin. You see, I have Wyckoff there. That's for elders. So, Hero Chef. I don't want to. This class is longing. I'm not analyzing any pair again. Work with what I have sent. This is like my third or fourth session today. So this one is for free for you people. So go and check. Everything I've taught you, go and check on the Hero Chef. Okay? Check your trend, your imbalance, or your other block, everything. Check. Market structure. Is it higher low or higher high? Is it lower high or lower low? Answer those questions. Trading is if then condition, not, yeah, if then. If I see this, I'll do this. If I see this, it's not just about making money. If I see this, I'll do this. Okay? Make some sense? Yes, I'll share the EU. I'll share the EU and GJ analysis. I'll drop that too for you. I won't drop UJ, I'll drop GJ. UJ is a re-entry. UJ is a re-entry. Yep. Okay, guys, have a pleasant week. Trade your plan your trade, and let's make the changes, okay? Make sure you're not over leveraging. That's one of the major challenge of traders. Don't over leverage. Don't over leverage. Nobody's chasing you, okay? Don't over leverage. Stick to the rules, okay? Stick to the rules. No over leverage. Once you over leverage, you know you're your own. When you blow your account, you fund another with another money. So why do you have to fund again? Okay? If you know it's not clear, reduce your stake. And if it's not clear, just reduce your stake. Instead of you using 1%, use 0.1% or 0.05% of your account until it's clear. Until it's clear, guys. Okay? Okay, guys. So I'll talk to you guys soon. For those who are on the binary session, we'll see you tomorrow, 2 p.m. Let's make money. We've been on almost over 80%, which is not a bad transaction. So I'll see you guys tomorrow, 2 p.m. for binary option session. Have an amazing evening. Good night. I'll try and upload the recording to the group so you guys can have it. Talk to you guys soon. Bye.